We've got an exciting show lined up for you, filled with the latest news and insights from the world of stocks and finance. To kick things off, let's dive into a story that's been making waves in the medical community. Researchers at the AIDS Clinical Trials Group, or ACTG, have just released the results of a groundbreaking study on a new HIV treatment. The study, known as AIDailyPress, looked at the effectiveness of a long-acting injectable antiretroviral therapy, or ART, compared to traditional daily oral medication. The results are promising, with the long-acting ART showing a significantly lower risk of regimen failure, which includes unsuppressed HIV or discontinuing treatment for any reason. This is a major breakthrough, as it could provide a more convenient and effective treatment option for people living with HIV, particularly those who struggle to adhere to daily medication regimens. The study's lead author, Dr. AIDailyPress, noted that the findings are an important milestone towards ensuring that all individuals have access to robust HIV treatment options. The research was sponsored by the National Institutes of Health and received funding from several major pharmaceutical companies. While this is certainly a positive development, it's worth noting that there are still challenges to overcome before this treatment becomes widely available. For example, the study found that some participants experienced injection site reactions, although these were generally mild and did not lead to discontinuation of treatment. As we continue to follow this story, we'll be keeping an eye on how the medical community responds to these findings and what it might mean for the future of HIV treatment. We'll also be exploring the potential implications for investors in the pharmaceutical industry. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of finance and mining today with a fascinating story about Mineros, a company that's making waves in the industry. According to recent reports, Mineros has released its financial statements for 2025 and 2024, providing insight into its performance and operations. The company's average realized price per ounce of gold sold was $4,029 for the 3 months ended December 31, 2025, and $3,474 for the year. This is a significant increase from the previous year, where the average realized price per ounce of gold sold was $2,662 for the 3 months ended December 31, 2024, and $2,387 for the year. Mineros also reported a notable increase in its all-in sustaining costs, AISC, per ounce of gold sold. The AISC for the Nechi alluvial property was $1,244 per ounce for the 3 months ended December 31, 2025, while the Hemco property had an AISC of $1,115 per ounce. It's essential to consider these numbers in the context of the broader market and industry trends. The gold mining sector has faced various challenges in recent years, including fluctuating commodity prices, increasing production costs, and environmental concerns. Mineros' financial performance is a testament to its ability to navigate these challenges and capitalize on opportunities. The company's commitment to responsible mining practices and its focus on exploration and development are key factors contributing to its success. As we analyze Mineros' financial statements, it's crucial to remember that the company operates in a complex and ever-changing environment. Factors such as global economic trends, government regulations, and environmental concerns can all impact the mining industry and, by extension, Mineros' operations. In conclusion, Mineros' recent financial reports provide valuable insights into its performance and position within the gold mining sector. As investors and stakeholders, it's essential to carefully consider these numbers and their implications for the company's future prospects. Welcome back to the Riskwiser Zone. As we wrap up today's episode, I'd like to shift our focus to a fascinating conversation with Barclays CEO, who shared his insights on the global market and emerging economies. According to him, India has emerged as a unique category among emerging markets, driven by its long period of political stability and strong economic growth. The CEO highlighted that India's operating environment has improved significantly, with world-class digital infrastructure, seamless payments, and modern commerce. However, he also noted that the country still needs to work on improving the ease of doing business, particularly in areas such as labor laws and corporate credit markets. One of the key takeaways from the conversation was the CEO's concern about the impact of higher interest rates on global markets. He warned that borrowers who relied on cheap funding could face rising default risks, which could pressure companies and weaken corporate balance sheets. The CEO also shared his thoughts on the private equity model, stating that while the core model still works, firms are struggling to sell companies at expected valuations due to slowed IPO markets and harder strategic or PE-to-PE sales. Lastly, he praised China's 35-year growth story as nothing short of a miracle, despite the challenges it faces, including sanctions and weakening domestic demand. The CEO's comments provide valuable insights into the complexities of the global market and the opportunities and risks that lie ahead. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.